Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. We're going to be getting into quite a lot within this one. It's been a very explosive Sunday night into Monday, certainly here in the UK, straight into a heat wave. You know, cryptocurrency is certainly turning the heat up as a market right now. We're going to be discussing all that in this video. We've got some pretty insane moves. In fact, let's just dive onto here and take a look at some. You know, Bitcoin right now is up 6.8%. Ethereum is up 11.20%. Rune is up 19.3%. We've got the likes of MATIC, which I think is 20% plus up, 22% up for MATIC. This is substantial. Now, is this just a relief rally is probably the main topic of what we're going to be talking about in this video. You guys know that ultimately I have, I don't want to say pessimistic because I'm long-term extremely bullish on crypto, but certainly short to mid-term, quite a pessimistic view on just where the cryptocurrency market is going in terms of price. You know, I think we're heading into very turbulent times and unprecedented times, and we're going to be talking about that in this video. You know, we know the correlation that Bitcoin has with the euro dollars. This is something that we've looked at really since Bitcoin was around about your 40k range, as markets are tethered or reliant on liquidity. And when we see interest rate hikes for the US, that really takes liquidity off the table. And this is some of what we're going to be getting into in this video. Also talk about, and I spoke in a lot more sort of detail about this with my Patreon members yesterday in the meeting. We're continuing to see open interest rise for Bitcoin really since the start of the year. And if you look at what Bitcoin has done since the start of the year, it's continued to sell off. So the trend has very much been down with a rising open interest. You know, this, I believe, supports the downtrend and really reaffirms it. And technically, we are very much still in a downtrending market. And I don't think that's going to change, but we are going to get rallies within that. And I believe that's what we're currently seeing. So let's get into it. Let's take a look at the overall crypto market, which is currently valued back over $8 trillion today. It's good to see. At one point, we were at 3 trillion. We're now at 1. And we have seen some pretty horrific selling this year. I mean, Bitcoin today is still down around about 68%. Let's take a look at the total market cap before we move on. This is the total market cap, including Bitcoin. Had sold off from 3 trillion, you know, and is sort of 67% down today. And we're seeing quite a nice little uptick here. Does it continue? It could, but my bias is that eventually it fades and we get lower prices across the board. I do not see this market going into a runaway bull market anytime soon. I think we've got more pain to come before that happens. And I don't want to dampen the mood right now because I think it's great that crypto is pumping. Certainly if you hold crypto, and remember we still hold crypto even though it's a small part of our overall allocation in terms of a portfolio, and we're looking for lower prices to get to sort of get back in. But you know, it's natural. I mean, just look at all the kind of sell pressure you had here to see some sort of a move. And in yesterday's video, and I also want to talk about what's coming this week, like the fact that we've got earnings and how is this going to affect the stock market. And I think bad earnings are going to be quite detrimental. You know, with regards to Bitcoin, you're still in this kind of deviation territory. A deviation here is probably going to bring you back down. And then you really are just forming some sort of potentially a rising wedge, which kind of ties in with our thesis of you know, this kind of bear flag structure that we've seen 3 times now. Potentially this was going to be the 4th. And ultimately, you know, I still do think we see lower prices. But there's always a scope for upside. You know, some of the harshest rallies occur, and like what we're seeing today in a downtrending market. But it's really important not to get carried away, I think, and kind of get that FOMO. And you guys do whatever you want. At the end of the day, you know, if you want to invest here, that's on you. But personally, I'm going to wait and see how this shapes out. I'm not in a rush to start accumulating here. And I think the fact that we had the CPI print down here and markets saw a bit of a tumble, but then really started to rally on the back end of it and closed up for the day, would have given the long traders and the bulls the confidence they needed to go, okay, well, if, you know, essentially that isn't going to cause the market to capitulate further, what will? And this is what I feel like we're waiting for, that next news-driven event. And I think whilst we're setting up this structure, it's not safe entry territory for me. We've got earnings this week. Today, we've got Bank of America. I think that'll be out by the time the video is released. We've got Goldman Sachs and we've got International Business Machines. We've got Johnson & Johnson and Netflix tomorrow, and then we've got Tesla Wednesday, which is going to be a big one. How is this going to affect the likes of your stock market? Well, let's take a quick look at the stock market futures. They are currently up today and having quite a good day, actually. But we ultimately think, we've said, look, go and look at a stock market going into recession, your NASDAQ and your S&P. They don't do well. And given the kind of correlation that crypto has with it, I think that's, if we do enter that recession, which I think we're already in, I don't think that's a good look for either crypto or the kind of US equity sector. But it's going to be interesting to see what Tesla's earnings come out like. They are just based on the sort of overall market significantly down. So earnings may not affect it too much, but also, particularly bad ones may have quite a substantial effect. And you are looking like you're forming some sort of base here. Does it last, though? We're yet to see. The issue that we've really got now is, what's next? The Fed are upping interest rates. The last time they did this into sort of 2019, they broke stuff. And I think that's going to happen again. And I think that could cause some sort of a capitulation event. All reasons why we're staying very much on the sidelines for now. If we look at Bitcoin and the Eurodollars future, you can see how just tethered these are. Eurodollars really sort of dictates interest rate hikes getting priced into markets. You can see a similar thing is happening here in regards to, us taking a break. Does this roll over again? I believe so. And the big one coming up in this month is essentially the Fed meeting, where they're actually going to look to raise interest rates by either 75% or a point. And this comes on the 26th to the 27th of this month. Going to be very, very interesting. After June's super hot consumer price index, market expectations began to climb, and they went even higher after the Bank of Canada raised its rate by 1 point. So the Bank of Canada have already essentially done so. Are the Fed going to follow? We've had sort of contradictory remarks from various members. Some have said that it doesn't matter whether we do 75 or a point. Some have said we're going to stick with 75. We will see. And I think another thing that people are really looking at that markets are getting behind right now is, have we reached peak hawkishness? Are we at that stage now where the Fed may be thinking of kind of undoing or going a little bit easier from here on out, given the fact that we have seen a lot of the commodity prices actually see, a bit of a substantial pullback. And I think there's a number of reasons for this. Oil, for example, saw a real substantial pullback. This is one of the main drivers of inflation. But what people don't realize about this pullback is it's artificial in the sense that, we have the US really dumping oil onto the open market, trying to bring these prices down. Wheat doesn't make a lot of sense to me because we're actually at pre-invasion levels. So there's lots going on. It's very much a three-dimensional chess game that we're playing as investors, as traders, trying to figure out these markets, and nobody's going to figure them out perfectly. We also have the dollar having a bit of a pullback after seeing a substantial move to the upside. This is all factoring into our tiny but relevant and futuristic cryptocurrency market. So lots of things to pay attention to. Again, just to reiterate my stance that I still see lower prices. I don't think we avoid them. I don't think this is it for the sort of pullback that we're in. And I think given the fact that this crypto pullback has really been liquidity led in the sense that it's been getting taken off the table and we've been very tethered to the traditional world of finance, I think there's more pain for that in the short-term horizon. So the big date to look for, pay attention to earnings moving forwards. We've got Bank of America Corp, Goldman Sachs today, and of course ABM. Then we've got Johnson & Johnson, Netflix, although Netflix are substantially down already. And then we've got Tesla. These are all going to play into, and it's really earnings season now, guys. These are all going to play into the US stock market, of course, and then, of course, that's going to play into the cryptocurrency market. But we will see where we end up. You still are in sort of, again, deviation territory here. Just putting this back to where it was. You're in this kind of potential deviation range play. You've made this high. The issue you've got is, do you then do something like this? And then you come all the way back down. And how do you think your altcoins are going to react in that kind of environment? Certainly going up with this kind of momentum. You've got open interest that really supports the downtrend and a number of other things taking place. So just be cautious out there. Don't get too carried away. It's lovely to see, but we've got a lot coming this month that we've got to contend with. And typically the second half of the year is it's not going to be worse in terms of percentages lost, but can be worse than the first. Certainly in terms of the equity market. And if we are in a recession, I feel like we're just waiting for them to actually come out and officially announce that. You know, it's not the brightest of futures that I think we have in the short term. Mid to long term, you know, we're exceptionally bullish on crypto. We really do think this is an industry that is going to change the world. So that's really the bulk of what I got for you in this video. Lots to pay attention to. It's lovely to see. I am going to try and fade this move in terms of short it. Where exactly, you know, I think we really have to kind of sit on our hands for now and see if we get any kind of a setup that would lead us to take those shorts. For now, not the most confident shorting environment. But for anybody in the Patreon, you know, we will keep you up to date and try and take these opportunities when they arise. And that is all I've got for you in this one, guys. Enjoy the weather today. Enjoy your Monday. And I'll catch you all in the next one. See you later.